The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone. Welcome to the Sirius Report Market Wrap-Up for Friday, September 27th, 2024. It's the end of the week, and it's been an interesting week, especially the way geopolitics and changes to banking policies by China and now today Japan have affected the U.S. markets. So we're going to take a look at that. We're going to take a look at some economic data, the standard manipulated data that really has driven the markets in some capacity, and a few other anecdotal stories. So with this in mind, let's go ahead and take a look and see how the markets fared today. Well, the Dow closed the day at a new all-time high, up 137 points to close out at 42,313. Meanwhile, the S&P 500 was down 7.2 points to 5,738, while the Nasdaq was down nearly 71 points at 18,119. In the bond markets, well, there was buying in the long end, middle and long end of the bond yield or bond markets that dropped the yields quite a bit. The 10-year was down 0.038 to close out the week at 3.751, and the 2-year closed out at 3.557, down 0.066. In the dollar, interestingly enough, we should have seen the dollar strengthen, but it appears we have a new hawk that's going to be prime minister in Japan. The dollar was down 10 cents on the DXY to close out the week at 100.42, and at one point even getting as low as 100.17, nearly breaking the 100 handle. Well, as mentioned, the yen soars after war hawk Ishiba wins shock LDP leadership vote. And what was this week's second biggest surprise, the first one being China's stimulus announcement, Shigeru Ishiba, who is widely viewed as an underdog in today's LDP leadership election, was elected leader of Japan's ruling Liberal Democratic Party, handing national power to a noted China and monetary policy hawk who wants a more equal defense relationship with the U.S. and has vowed to fight to prevent the nation falling back into deflation. What does this mean? Well, just when Japan was trying to raise rates to deal with inflation, this new prime minister doesn't care and is going to probably cut rates, bring in higher inflation to stem off the deflation that was taking place, the lowering of prices, and is going to be on the U.S.'s side big time in their battle against the multipolar world, China, and the like. So, U.S. regained an ally, and we'll have to see how that fares, though the question is it really going to affect markets or more geopolitics? In the gold markets, well, it was sell-off Friday as usual. The silver ended up down 36 cents, for closing out at 31.72 for the week, getting to a low of 31.33 and a high at one point of 32.35. Meanwhile, gold was down $15.60, closing out at 26.58. In the crypto markets, cryptos have had a good week, catching a bid, heading back towards the 70,000 handle. Bitcoin was up for the last 24 hours of trading, just over 1%, 1.01% to be exact, closing out at a high of 65,850. Closing out now at 65,850 with a high over the last 24 hours of 66,489. Meanwhile, Ethereum was up another 2%, 2.35%, closing out the last 24 hours of trading at 26.94. In the oil markets, a little green day for both WTI and Brent. WTI was up 51 cents to close out the week at $68.18. while Brent crude was up 81 cents, closing out at 72.41. Well, the mystery of the upward GDP revision from yesterday is resolved. Everybody is now $500 billion richer, according to the revised Biden administration spreadsheet. Something strange happened yesterday when the Bureau of Economic Analysis released the final estimate of Q2 GDP. As part of the release, Biden's Department of Commerce, which also runs the BEA, reported that the GDP since 2020 has been revised markedly higher. Even though banks such as Goldman warned and expected a significantly negative revision to historical GDP numbers. So the real question is what now are they actually claiming as GDP? Well, since 70 to 75% is consumer spending, 20% is government spending, that leaves about 5 to 10% of actual real productivity. So the revisions appear to be primarily the government spending and tied into that borrowing, of course, and why we have nearly a $36 trillion national debt. Well, the University of Michigan Consumer Sentiment Survey came out and had confusing data. It had both current conditions and expectations picking up. The increase was seen across all education groups and political affiliations. Furthermore, all 5 index components gained, led by 6% surge in one-year business expectations. The expectations index is now 13% above a year ago and reflects greater optimism across a large portion of the population. That is an interesting thing because this election could be determined by how bad economic indications are. So if the population is thinking that we're going to be better, that would normally, well, logically lead to a strong Trump landslide. But the way elections are and the way the country's divided, who knows what really is going on. Well, we have core PCE, the Fed's favorite inflation indicator, and it came in the hottest since April, despite the fact that the Fed cut rates. Go figure. Fed's favorite inflation indicator, core PCE, rose less than expected on a month-over-month basis, but on a year-over-year basis, it rose from 2.6 to 2.7%, the highest since April. The headline PCE did fall to plus 2.2% year over year, which is also the lowest since March 21. So what exactly are we doing? Are we talking year over year? That for the standard PCE, and then we got headline PCE. This is why nobody can trust the Fed. Nobody can trust government statistics because there are so many variables and elements in the model that completely skew it towards whatever political ideology they want to and political narrative they want to impose, that you and I look at prices, rents, food, energy, etc., and know that we can't afford it, or I should say it's becoming more unaffordable. But the government skews it, so they're sitting in their little ivory tower and echo chamber and say everything is great, everything is going down. Oh, we need to supply liquidity to the stock markets. Well, will the Fed repeat the 1970s policy mistakes? For those who have studied the 1970s and the Volcker years, after the Burns year, well, Volcker didn't replace Burns, but he was pretty much in the Fed, the New York Fed, during the primary time of the 1970s, leading into his moving to the Fed chairmanship in 1980. The problem is that inflation was sitting for the latter half of the 1970s at, I would say 9% or better. Then late in the 79, leading into 1980, it jumped up to 13%. Well, the Fed had raised interest rates to 7.5%. Then they made cuts, and those cuts deepened the recession, made things worse as inflation shot up. That's where we go from 9 to 13%. And the Fed then tried to go back and raise interest rates by 2% to 9%. The only way it was ever gotten out is Volcker then, of course, took it to 20/21% for about 18 months, cleared out all the toxic debt, cleared out all the bad loans, and eventually they were able to start over, and you had the great Reagan economic period. Well, we now have inflation not getting back down to that 2% that the Fed always props up for the past decade or more. And it hadn't receded to that point. So now we're cutting rates. And of course, we have just announced, the announcement of the core PCE going up more than 2% for year over year. And thus the question is, will rate cuts to save the recession, save against the stock markets, will those cause the inflation that will inevitably crater out of control? And the only solution is to have a Fed chairman with the cojones to be able to take interest rates back up to a high level that cuts government spending and cuts the economy, puts everybody through another 18-month recession. Are they willing to do that? And there's any politician who's willing to do that? The question, obviously, at this point is no. But the real thing will be, how is Powell going to spin out of this if the 1970s get reduplicated and we have stagflation for the rest of this decade? Well, the irony of ironies, of course, just as economic sanctions against Russia, China, Iran have backfired against Europe and the United States, so too is the conflicts that never end. And we're talking about Afghanistan here. So the U.S. summarily just jumps out of Afghanistan. The Taliban take over like it's Saigon 2.0. And instead of trying to cultivate a relationship with them, no. The Taliban now are seeking to join the BRICS and are asking for an invitation to the upcoming summit in Kazan for the next BRICS summit. So if you think Afghanistan is looking for trade partners, they are. But they're looking to the east, and they want nothing to do with the west. Finally, we're going to take a look at why Western financial institutions are completely imploding and why they are. There's a podcast that Paul and I recorded this morning. It should come out probably Saturday or Sunday, so look for it. It's about the dying Bretton Woods and the dying institutions of the West. And here we have a story that is the epitome of that exactly. The IMF. The IMF came out and did a white paper and citing this: lower income groups are affected disproportionately because they spend a smaller share of their expenditures on products that benefit from exemptions of carbon tax, carbon footprint. So the poor don't make as big a carbon footprint because they don't have the money to spend on bigger things like private jets, yachts, etc., and they don't create the big carbon footprint. So you can't blame the poor. But the IMF then comes back in that same paper and says, oh, we need a global carbon tax. So those who aren't putting out the carbon footprint, we've got to tax them anyway. So you see the contradiction in terms, the hypocrisy. The elites who run the IMF, who create the most carbon footprint, want to do a global tax on the poor who do the least carbon footprint. It's similar to how we have taxes to eliminate the middle class, while at the same time the poor pay the absolute poor pay nothing, and the rich have hedge funds. Anyway, I want to thank everybody as always for stopping by on this Friday to get your market wrap up for September 27th, 2024. As I mentioned, Paul and I did some recordings today, so we got one coming out tomorrow morning and likely on Sunday as well. So look forward to that. Don't forget to like, share, subscribe, leave a comment, and share this with anybody you think might be of importance to. because we absolutely appreciate you here at the Sirius Report community. And until the next time we get together, have a great weekend.